Good morning. Thank you for taking out time to attend today's session. We hope that you are keeping well and safe. I am Deepak Bansal from AskPankaj DWC-LLC. We thank Dubai South for their continuing support and collaboration to conduct these tax education sessions. It is our shared objective to support businesses with knowledge updates and technical sessions. Today, we will be conducting the 12th session of the series. We endeavor to keep organizing regular sessions for your benefit in the future. In today's session, we will focus on the tax compliances for year 2021. We will continue with our monthly tax updates. As always, we will have real-time interaction with the participants during Q&A session at the end. For new participants who are joining us for the first time, Ask Pankaj provide advisory, compliance, and litigation services in the field of taxation, economic substance regulations, and corporate tax. We are a growing team of chartered accountants, lawyers, MBAs, and tax experts with a combined work experience of over 30 years. Our team has experience of having worked in Big Four, law firms, and leading corporates. Ask Pankaj team is proud to be serving leading companies in the UAE and provide thought leaderships in the field of taxation. Our today's speaker is Pankaj S. Jain. Pankaj leads the team of Ask Pankaj DWC-LLC. He completed his chartered accountancy from PwC with an All India 29th rank. He holds a master's degree in commerce and a bachelor degree in law. He is also chartered tax advisor from UK for European Union tax laws. Pankaj had worked with KPMG Belfast, Deloitte, Kohler India, and as a national head of taxation in Coca-Cola India. Before we begin, please note that you can use the control panel appearing on your screen for various functions during the webinar. We recommend you to download the handout from the handout section for your future reference. Please use the hand button during Q&A session for asking a query. Over to Pankaj.
Thanks, Deepak, and good morning to all of you. Thank you for joining us today. I know it's been almost 2 months since we have last interacted, and at the outset, apologies again for rescheduling our April webinar because we had certain issues because of which we could not organize it. So in today's session, we will talk about the recently announced reduction in the tax penalties. And of course, it has come out as a good news around Eid. It is indeed a business-friendly measure by the tax authorities and the government. And we'll talk about the details, how the tax penalties reductions could impact you, what happens to your past penalties, the issues relating to the ongoing litigations on penalties, what would happen to them. And since last 1 month, what have been the monthly updates, new announcement by the FTA, we'll discuss all that. So just to gauge the audience, we would like to just give a brief disclaimer. This announcement of the tax penalties reductions is recent. As of now, in the public domain is what is an Arabic document issued by the government. We still don't have an English translation by the government, even though those are also unofficial, but we don't have it from the government side right now. So please be cautious that all the discussions today is essentially to give you a general update about these reductions. Do not consider it as a professional or a tax advice. We advise you to take a specific case-to-case detailed advice in case any of the reductions could benefit you. And this is the entire discussion is based on an unofficial translation of the Arabic document which has been issued by the government. So just to gauge the mood of the audience today, we'll start with one small poll. Are you relieved by the news about the reduction in tax penalties? So I just want to understand, like, are there audience members who still feel that this reductions may not benefit them, or is actually not something which is a relief? So we'll open the poll for about 30 seconds. On your screen, you can see and you can click yes or no and submit your replies. We have about 100 participants. Thank you for that as of now. And about 75% of the participants have already voted. We'll keep it open for another 10 seconds. Great. I'll share the results. So as you see, almost 85% of the participants do feel that it is indeed a relief from the reduction in the tax penalties, and it is indeed so. And there is absolutely no doubt that the reductions are beneficial. And as we'll see the details, we'll also go through certain illustrations to demonstrate the comparison between the old penalty regime and the new penalty regime. And you'll see the reductions are indeed significant. So for the purpose of discussions, we'll go through first the legal background, what is through which the reduction has been announced. There is a cabinet resolution which has been announced on 28th of April 2021, the number being 49 of 2021, and it will be effective 60 days post the publication of the resolution in the official gazette. So please do not consider that the reduction has immediately started. It will be effective 60 days post publication, and as you'll see in the subsequent slides, there are certain matters on which FTA will come out with the procedures and more details subsequently. If you look at the whole document, the reduction, and compare it with the past penalty regime, which has been existing for almost 3.5 years since the implementation of VAT on 1st of January 2018, it's essentially a rationalization of tax penalties. Most of us here would know that in the 3 years there are certain penalties which, if we look at from a rational perspective, looks a bit indeed not applicable or should not be applicable, and that's why a lot of companies have disputed against the appeal, gone to the different appeal forums, and also the appeal forums and the courts have favored the taxpayers in relation to certain penalties, especially on relation to voluntary disclosure. But at different levels of the appellate forums, the penalties keeps getting revised or set aside or confirmed. And those are the interesting parts of tax laws anyway. And also, if you see, there is a tax amnesty scheme that we'll talk about today, which is essentially giving an opportunity to all the taxpayers to basically determine all the past errors that they have and just kind of clear it and start with a clean slate, as we all of us are calling. So that's a big opportunity. The rationalization will also help in the future tax compliance by the taxpayers, because now the penalties are not that high and there are incentives to declare any error sooner than the later, and we'll discuss that in the voluntary disclosure. So there is an incentive to do a tax compliance and come out with any errors detected sooner the better in terms of the quantum of tax penalties. We have divided today's discussion in especially the penalties in essentially three parts. One is the tax penalty amnesty scheme for all the past penalties. Then there are certain penalties which are having a significant financial quantum. And third section basically briefly covers all the penalties which have been either generally the same or reduced, but the instances of those penalties are very few. So the tax amnesty scheme, in terms of the concession in penalty pending or existing liabilities, the scope is all the administrative penalties. So all the penalties that have been imposed are essentially called administrative penalties, which have been imposed prior to the effective date of this cabinet resolution. So since 1st of January 2018, if the penalties have been imposed, there will be a concession almost to the extent of 70%. So 30% of that penalties which are existing or pending would then be payable in the future. In terms of conditions of this amnesty scheme, first, of course, is these penalties should not have been fully paid. The second is the due tax, if any, up to 31st of December 2021 should be paid. Now, it's slightly unclear from the document as to whether we are talking about all the taxes for the tax period up to 31st December 2021, or all the taxes up to the effective date of this cabinet resolution should be paid by 31st December. But I think the harmonized interpretation would be that please be tax compliant up to 31st December, then please continue to pay all your taxes in the future, subject to which this concession would be available to the taxpayer. And then the 30% of the penalty which is pending or not yet paid should be paid by 31st of December 2021. So the 70% will be waived off. The procedure is yet to be determined and announced by FTA, whether on the e-services portal the penalties would be automatically reduced once paid, or there is a specific application that needs to be made. All that procedure is yet to be known. But the good news, or the crux, is that 70% of the existing or pending liabilities would be waived off. Now, the document do not specifically refer to a situations where the taxpayer have already appealed against the penalties, or as a matter of appeal procedure have already paid the penalty, but is currently pending the litigation either as a reconsideration application or objection before TDRC or the higher appellate authorities. So the document in terms of this cabinet resolution is not referring to those situations, but as I said, that FTA is yet to come out with the procedure, and we'll have to wait and watch and look out on the details of this tax amnesty scheme and accordingly take a call. Why I talked about the tax amnesty scheme first is something you will realize when we'll now talk about the specific penalties, because the tax amnesty scheme deals with all the existing penalties. So now in the second scenario, cases where there is a tax payable either in terms of not paid in full, or there is a short payment of tax due to some error, or there is an excess refund claim either on account of again an error of paying less or accounting for a less output tax or a higher input tax. So the first penalty we'll talk about is the late payment of tax payable due as per the return. Now, if you recall, this penalty used to be, if I can use the word, the most significant one, because the moment the due date for the, and this is a tax for which you have already submitted the return. As per the VAT return, there is a tax amount due, and that has not been paid by the due date. So please bear in mind, we are talking about a situation where the return has been submitted, which basically discloses a tax liability, but on account of cash flows or other reasons, the taxpayer has not been able to deposit the tax with FTA. So in those cases, the immediately when the due date used to get over, so 28th of the following month is generally the due date. So at 12 o'clock midnight, you would automatically see a 2% of the due tax being added as a penalty. And if that tax is not paid within next 7 days from the due date, another 4% of the pending tax used to be added in our e-services liability column. And after 1 month from the due date, on a daily basis, 1% penalty of the tax amount used to be added. Of course, the total overall ceiling used to be 300%. So effectively speaking, if a person do not pay a tax for about a year, then 300% for that tax amount used to be added as a additional penalties. This is where the biggest reduction has come in the new cabinet resolution. So as for the revised penalty, and this is yet to be effective, please bear in mind, we have talked, it's yet to be effective. The moment a tax which has been shown in the tax return and the tax return has been submitted, but for some reason the amount has not been deposited with FTA, for the first 1 month, there will be only 2% of the due tax which will be added as penalty. And thereafter, compared to that, after the completion of 1 month, instead of 1% per day penalty, 4% per month now will be added. Of course, the overall ceiling remains 300%. But from 1% per day, which comes out to be about 30% per month, the liability has now reduced to 4% per month. So if we talk about an illustration on this, let us assume a tax payable as per the VAT return was 100,000, the current quarter or a current period return. and the due date of this tax payable was 28th of June 2021. I've highlighted this 28th June 2021 in red, basically to bring across the same point that if we look at the tax liabilities of the past returns, those penalties might have already been added onto your e-services account, right? So those are existing penalties, and you may have to resort to the tax amnesty scheme. It is not clear whether those penalties would be recalculated as per this revised penalties, because those penalties have already been added, and as per the cabinet resolution, at maximum amnesty scheme would be available for that. So please do not consider that all the existing penalties for late deposit of tax from 1st of January 2018 will be recalculated as per the new formula. In the tax laws, this is again why I always say that I enjoy the tax law. This is the beauty of tax law, that it's a matter of interpretation whether the day the penalty is to be calculated, we have to look at the law, or the day the offense or the violation took place, the law existing as on that date has to be seen. Anyhow, that's a more detailed debate. We can have it some other day. But assuming on 28th of June 2021, the tax was payable and it has still not been paid. So in the future forecast, the penalty status as on 28th of December 2021, which is after almost 6 months of the due date, if the existing penalty regime would have continued, the penalty would have been calculated for the first immediate penalty 2%, then in the next 7 days 4%, and then from 28th of July, that is after completion of one calendar month, up till 28th of December, that's about 153 days, 5 months, will have 1% per day penalty, totaling up to 159,000 dirhams. On the other hand, now under the revised penalty, a taxpayer will only have a penalty of 2% for the first 1 month and 4% per month for 5 months, a penalty of total 20,000. So the penalties will reduce all the way from 159,000 to 22,000. That's more than 70% reduction technically. But this is of course not amnesty. This will take place in the future. The second is here, first we talked about a situation where the tax return has been submitted, the tax liability has been declared, but the deposit was not made. But what if a taxpayer misses out to submit the return by the due date? Now, in that case, there are fixed penalties. It's not a percentage-based penalty. So any delayed submission of the tax return, if it's the first time there has been any delay since the registration, 1,000 dirham is the penalty. And in case within the next 2 years, the taxpayer again misses out submission of tax return on time, then 2,000 dirham is the penalty. In terms of the revised penalty regime, there is absolutely no change. These penalties for delayed submission remains exactly the same. Now, consider a situation practically that whenever there is a delayed submission of tax return, and there would generally be a tax liability on those returns. So we will have to basically take care of two items now: delayed submission of tax return plus the delayed tax payment. So as we discussed in the earlier regime, while there was a 1% per day penalties for the delayed payment of tax as declared in the VAT return, we are not correcting a tax return here. We are only submitting a late return, and whatever was the tax declared in the tax return, the due date will be calculated as per the corresponding tax period. And accordingly, in the new tax penalty regime, that penalty will now reduce to only 4% per month. Now, we talked about delayed submission of tax return, and we said we are not yet talking about the corrections in the already submitted tax return. Here is a situation now: we have already submitted a tax return, declared a particular tax liability, or declared a specific amount of excess credit in terms of negative net tax payable. And thereafter, we correct that tax return. We realized, oh, we perhaps missed out to declare certain more sales, or we took excess credit and everything. Any incorrect filing of tax returns essentially again involve first a fixed penalty, if somebody is doing corrections for the first time or there was an incorrect return, 3,000 dirham is the penalty, and 5,000 in case of repetition, that is for any other tax period if you are still correcting. Thereafter, the penalty, fixed penalty, used to increase to 5,000. Under the new regime, first there is a rationalization of these fixed amount itself. From 3,000, the first time penalty has been reduced to 1,000 dirham, and thereafter, in case there is more correction or more tax period which needs to be corrected, the 5,000 fixed penalty has been reduced to 2,000 dirham. Now, the interesting part is there are more additional aspects which have been added in favor of the taxpayer. The first point is, suppose the correction itself is, let's say, for only 700 dirhams. So the law says now under the new penalty regime that if the tax difference on account of the error and the corrections of that error is less than the the fixed penalty amount itself, then the penalty is only to the extent of the differential tax. It will not still be that fixed penalty of 1,000 or 2,000. It will be restricted to 750 dirham. The second case is that if the tax difference is less than 500 dirhams, then there is no fixed penalty also. And we'll come on the one of the situations about the input tax, how it happens. The best part is in the new penalty regime, it has been announced that if the correction of any incorrect return has been made before the due date of that return itself, then there is no penalty, even in those cases where the additional tax is payable. But so long as the correction has been made before the due date of that return, no penalties for the incorrect return will be made. So in terms of illustration, let's say there is the due date of a tax return this month or the quarter. The due date this time is 30th of June 2021, which is Sunday. And let us say an incorrect return has been submitted on 15th of June 2021. The error could be the less liability has been declared, excess credit has been claimed, the reverse charge liability has not been declared, zero rated sales have been declared. Any error whatsoever which could happen in the return, any possible, so long as it is corrected before the due date, on or before the due date of 30th of June 2021, there is no fixed penalty. This, of course, we are talking about the fixed penalty. Any on account of the error correction, there is additional tax payable, assuming the taxpayer pays it by 30th of June 2021. There, of course, will not be that percentage penalty also, because the tax has been duly paid on or before the due date. A second situation arises. Let us say the same situation, the due date is 30th of June 2021. The incorrect return submitted without claiming the credit of 15,000 input additional tax credit. And now say we have already submitted on 30th June, so we don't have any time left to correct it on or before the due date, and we subsequently revise this return. The question arises, if we do not have an additional tax payable on account of the error and the correction made, will the fixed penalty still be applicable, because we are talking about a correction? Now, if you look at the unofficial English translation of the Arabic document, the word used is only tax difference. It does not per se specifically says tax payable, additional tax payable or anything. But on a rational basis, if no penalty is levied, if the tax difference is less than 500, it can reasonably be assumed that in case the correction is made to increase your input tax, or the correction is not resulting in additional tax payable, the fixed penalty may not be applicable. But as we said, we are still waiting for official documents from FT and the clarification, but it should be reasonably be able to assume that. Why we are talking about this situation in particular? Because if you recall, in the last 2.5 years and almost a year back, when we conducted our webinar in June 2020, we talked about the public clarification relating to the time period in which input tax credit can be claimed. And as per the FTA, the clarification is that if a taxpayer misses out to claim the input tax credit in the two relevant tax periods, then the taxpayer is required to submit a voluntary disclosure to claim those VAT credits which have been missed out in the two tax period. Now, in those times, since the clarification was not there, that if we submit a voluntary disclosure, would the penalty of this 3,000 and 5,000 would still be applicable even though there is no tax payable? Though we have successfully argued case in FTA that in case no additional tax is payable, the fixed penalty should not be levied. But under the new regime, I think it is far more clear that in case of their tax difference is less than 500, no fixed penalty would be levied. Now we talk about late payment. Now that we have corrected our VAT return either through a voluntary disclosure or if a tax assessment has happened, now because of that error correction, in addition to fixed penalty, a taxpayer may also have an additional tax liability which needs to be paid. Now, under the earlier regime, as we just discussed, for any late payment of tax, the penalties 1% per day, this 2%, 4% used to be calculated right from the due date as per the tax period which has been corrected. So if somebody is correcting a tax period of 2018, this late payment tax will be calculated even on account of voluntary disclosure right from 2018 onwards. The second significant reduction in the VAT penalty now is that if there is a late payment of tax for any past tax period on account of voluntary disclosure or a tax assessment made by the tax authority, and that additional differential tax has been paid by the taxpayer within 20 business days of submitting a voluntary disclosure or receipt of the tax assessment, then there is no additional variable penalty applicable for the late payment of tax. Please mark my words. Right now, I'm using the expression for late payment of tax. Why? You will understand the context in a little bit in the subsequent slides, because there is another penalty on account of voluntary disclosure. But to the extent of late payment of tax, there is no penalty if the tax has been paid within 20 business days. However, despite submitting a voluntary disclosure, if the tax has not been paid within 20 business days, then for the first 1 month, 2% of that additional tax would be calculated as a penalty. And if that additional tax on account of voluntary disclosure or tax assessment is still not paid after beyond 1 month, then on a monthly basis, 4% will be calculated and charged as a penalty. Now, practically, you would also see a situation that taxpayer submits a voluntary disclosure and then FTA has to approve that voluntary disclosure, and it may take certain time. However, the penalties here are being levied, the revised penalties, 20 business days from submission of the voluntary disclosure. So what we recommend is that once a voluntary disclosure is being submitted, then pay the tax immediately. The tax authorities, FTA, may approve that voluntary disclosure at a subsequent point of time. Now, if we take an example illustration in terms of numericals, I know today's session is all about numbers. It's not about the law, English interpretation. It's morely about the numbers and the time periods through which it is calculated. So kindly bear with us while we take you through this numbers exercise. So let's hypothetically take an example that a return for the period January 20 to March 20 was the due date for which was 28th of April 2020. I'm talking about last year. It's been more than 1 year since the COVID has, the lockdowns and everything has happened. So that's why we specifically picked up 2020 as an example illustration. So the tax which was originally declared in that return was 100,000. And subsequently, on account of some review of the documents and everything, the taxpayer identified that they have missed out to declare additional tax of 25,000. Again, I'm saying when I talk about additional tax, it could be on account of output liability not being correctly declared or ineligible credit being taken. So either which way, the net impact is additional 25,000 liability which needs to be paid. The voluntary disclosure was submitted on 20th of June 2021, and the additional tax would be paid by 28th of June. Since today we are on 24th of June, the would be paid on 28th of June 2021. Now, if we talk about the earlier penalty regime, this is a taxpayer uh, in its own volition have gone to the tax authorities, declared no tax notice, nothing. But despite this, they would have ended up paying 2% immediately, then 4% after the seventh day, and that 1% per day penalty, maximum cap being 300%. For a voluntary disclosure of 25,000, they would have ended up paying another 75,000 as a penalty on account of voluntary disclosure. Now, under the revised regime, as we said, if the additional tax has been paid within 20 business days from the submission of VD, then no penalty is imposed on the late payment of tax, even though it may pertain to a past tax period. So it's essentially an incentive today for all the taxpayers that, okay, government will not levy that 1% per day penalty. Please feel free to review all your past 3 years, and essentially because tax has been implemented fairly new, it's just about 3.5 years since the tax has been implemented. Even as of today, when we interact with certain new companies or conduct this Q&A session that we'll have at the end of the sessions, we come across a lot of questions which could impact a company right from 2018 because the tax position taken by them was inherently incorrect or was not comprehensive. So now is the time for all the taxpayers to go after the last 3.5 years, get their accounts reviewed, data reviewed, tax positions reviewed. And in case there is any correction that needs to be made, there is no penalty so long as the tax is paid within 20 business days of the voluntary disclosure. Now we talked about the no penalty of for late payment of tax on account of the voluntary disclosure. But earlier also, and under the new penalty regime also, there is still a penalty for the voluntary disclosure itself. So the fact that the tax was not paid, the government is saying, okay, you pay within 20 business days, will not levy the percentage-based penalty, but the fact that an error was committed. So if a voluntary disclosure is being submitted and now there is, and factually what happens is a company can submit a voluntary disclosure on its own because without any notice of tax audit by FTA, without FTA visiting their premises and everything, the company may have proactively identified the errors and submitted a voluntary disclosure. In the earlier penalty regime, the 5% of the differential tax, which has been declared in the voluntary disclosure, used to be the penalty for voluntary disclosure in addition to the late payment of tax of 1% per day. Under the new penalty regime, now the whole structure has been put into a slabs. So if a voluntary disclosure is made within 1 year from the due date, so if the tax period, we are in June, so let us say for the tax period or the quarter October 2020 to December 2020, a company makes a voluntary disclosure that's within 1 year from due date, the due date being 28th of January, the voluntary disclosure penalty would only be 5%. And again, reiterating, if the tax is paid within 20 business days of voluntary disclosure, no further penalty. So your a company is imposed with only additional 5% penalty on account of the error. However, if a company delays the voluntary disclosure in terms of identifying the errors and everything, and the correction is made between 1 to 2 years of the due date, this penalty of voluntary disclosure increases from 5 to 10%. Going forward, again, further delay in identifying the error and the voluntary disclosure is made between second and third year of the due date, the penalty increases to 20%. And similarly, between 3 to 4 years, 30%. And if after 4 years the voluntary disclosure is made, then the penalty increases to 40%. So instead of 5%, which was a fixed penalty earlier, now it has been basically put into a slab. Again, one can call as incentive for the taxpayers to identify and correct their sooner the better. And at the same time, the other way around is also the more a taxpayer delays any errors of identification and corrections, the quantum of penalties would increase. Now, the second situation is many a times FTA sends a tax notice, audit notice to the taxpayer, and eventually they conduct an audit also. So what happens practically, and this is a kind of, if I can say, a global phenomena, because that's the nature how everybody operates, is the moment a tax audit notice comes, the companies would always like to do a kind of a pre-audit done, a review done, so that they are ready for the tax audit. And during that pre-audit, the company identifies certain errors that ought to have been corrected earlier. And what they do is, while the audit notice have come and the pre-audit work has been done, but the FTA team or the tax authorities team has not yet started the audit. So in the earlier regime, if the voluntary disclosure used to be submitted after receipt of the tax notice, audit notice, but before the start of the tax audit, the penalty used to be 30%. Again repeating, in addition to that late payment of 1% per day, that's slab payments. However, if a voluntary disclosure used to be made after FTA has identified the error, that is during the tax audit, then the penalty used to increase to 50%. Now, in the revised penalty regime, while the taxpayers have been given a lot of incentives, a lot of reductions, this is where the penalty regime now says that the moment a tax audit notice has been issued, after which a company is making a voluntary disclosure, the penalty would be 50% of that additional taxpayer, whether or not the audit has started or not. Now, this is where it becomes very, very critical to note the difference, that if an audit notice has come, thereafter a company does a voluntary disclosure, the penalty would still be as high as 50% of the tax amount. Of course, the late payment of that tax for whichever period the voluntary disclosure is made would still not be applicable. But instead of starting the audit versus the audit notice only being received, that difference has now been taken away in the new penalty regime. That, in terms of the implications, I'll come a little later. But that basically takes us to this poll: that do you think that a proactive actions could further reduce the quantum of tax penalties? If I'll just open the poll. So answers are still same, yes or no. That do you believe that as a tax manager of a company or as a tax consultant or auditor of a company, if you take proactive actions, it could further reduce the quantum of the tax penalties even under the reduced penalty regime? On your screen, you will see the two options, yes and no. If you could pick any one of them. We'll keep the poll open for 10 more seconds. Wait, I'll share the result. So we have 83% of the participants believe, rightly so, that a proactive actions could further reduce the quantum of the tax penalties, while 17% believe that the proactive actions would still not reduce it. But that's something we'll discuss now. So now talking about a situation where for any past period, error was committed, so it effectively amounts to an incorrect return. Excuse me. And those errors, as of today, can only be corrected by way of a voluntary disclosure for that tax period. And of course, whatever is the error resulting in additional tax payment, it will also involve a late payment of tax. So if we see comparatively, earlier regime for the incorrect filing of VAT return, there used to be a fixed penalty of 3,000 or 5,000 for repetition, which has been rationalized to 1,000 and 2,000 for a repetition. The late payment, which used to as high as 1% per day, will now be effectively nil if the tax payment has been made within 20 business days from the voluntary disclosure submission. And depending at what point of time the company is submitting a voluntary disclosure before receiving an audit notice or after receiving audit notice, and how soon now compared to the due date it's submitting, the percentage based penalty could also be further rationalized. So two things that you see, one is this nil, then 5% or 10% in case you are within 1 year or 1 to 2 years you are submitting a voluntary disclosure and before the audit notice. Instead of 50%, a, a proactive tax manager can effectively reduce, or a finance person of a company can effectively rationalize the tax penalties only to 5 to 10%. This is a very, very important point that we wanted to bring about, and this kind of slide summarizes that sooner a company identifies the error and corrects it before receiving audit notice, then the thing can reduce the tax penalties quantum. Why I'm again emphasizing is the receipt of audit notice, that in 2021 we have witnessed that a lot of companies have started receiving an audit notice wherein the authorities generally ask us to provide the data in a particular format. More often than not, about 5 to 10 working days are given. And in that notice, then they kind of lay out the plan that, okay, you submit the data, after so many days, we'll come for 3 or 4 working days in your office. This is how the work will be done and everything. So in 2021, the tax authorities have been more proactive in the tax audits. So uh, uh, please take it as a kind of a development in the country that the tax audits have increased compared to the last 3 years. That reminds me, just we will certainly be circulating these slides as a matter of client alert. And since, as we said, it's more to do with the numbers and one may have to refer to all these tables time and again. So we'll circulate the slides after the session is over. So if you're taking a screenshot or anything, please feel free. We'll circulate the slides anyway. Now, we first talked about the scenarios, as I said, where there would be a tax payment on account late payment, short payment, or excess refund. But there could also be a scenario where there are certain tax compliances which may not involve tax payable or a tax payment per se, but it's still a matter of tax compliance, and there is some errors for which a penalty used to be levied. So if we talk about the first penalty, which is delay in the submission of the registration application, the penalty used to be as high as 20,000 dirhams, and which has now been rationalized to 10,000 dirhams. This is a point, if I say, we have been like conducting these education sessions right from September 2019, and this is a point we have time and again emphasized, that a company which is making 100% zero rated supplies, 100% export of services, especially the free zone companies, even if your supplies are not taxed because of being zero rated, but if the quantum of supplies exceed 375,000 dirhams, the company is required to submit a tax registration application. In that application, one can seek an exception. But if there is a delay in that submission of registration application, despite having 100% zero rated supplies, penalties used to be levied as high as 20,000, which will now be revised to 10,000, which will, for the future offense, will be 10,000. I correct myself. The past penalties will not be automatically revised to 10,000. We are only talking about the future violation and the future penalties. The second, and this is again a very, very kind of good rational thing, is the delay in the submission of deregistration application. And we have seen a lot of cases, especially companies who, under a mistaken impression, registered themselves in 2017 or early 2018. Uh, just to share, like a lot of companies actually, or the business owners forgot that they were registered for VAT, had not been submitting the VAT return, had zero supplies for the full year, and did not deregister. Those companies were imposed with a penalty of 10,000, which is now rationalized into a more stepwise approach, that if there is a delay in submission of deregistration application, the penalties will be 1,000 dirham per month of delay and subject to a maximum of 10,000. While of course we are not discussing about the nuances of deregistration, the time limit is 20 working days from the day when the company is required to deregister, and there are various conditions to deregister. If you look at the handout sections, we have shared with you some thought leadership articles that have been published in different newspapers. And one of the articles we have talked about this VAT registration and deregistration details and how the provisions are there. Please feel free to download the handouts and for your future reference. The next penalty is the failure to keep required records and informations, and this is general, so it could be any record or information relating to the taxable supplies, purchases, and everything. The penalties, while the first time penalty for failure to keep the records and information still the same as 10,000. In case of repetition, it has been now rationalized from 50,000 dirhams to 20,000 dirhams. Now, there have been instances, I'm talking about early 2019 or mid 2019, where we had seen a case that a company submitted certain data to FTA in Excel, and there was some error in the Excel file because of which the description of certain supplies were not correct. And the company was imposed with this penalty that the records are not, or the information is not being correctly maintained. Uh, we can discuss separately what happened to that penalty, how we appealed and everything. But I'm just talking about an instance where a failure to keep required records or information could be interpreted by the tax authorities. Now, similarly, a failure to inform about any amendments relating to your tax records. Now, the penalties in case of repetition has been rationalized from 15,000 to 10,000 dirhams. The first time offense still remains the same as 5,000 dirhams. Now, just kind of quickly taking you through the other penalties, which are generally unchanged or rationalized a bit, is failure to submit the data in Arabic language as and when FTA requires. It still remains the same as 20,000 dirhams. The failure to facilitate the work of the tax auditors remains the same as 20,000 dirham. And as we mentioned that in 2021, we have seen a comparative increase in the tax audit notices which are being sent to the tax authorities. Now, in terms of failure to account for tax on the import of goods, it still remains the same as 50% of the unpaid or undeclared tax. This again is an interesting topic. We will have a session on this at the relevant point of time. Whether even if for those import we can take credit, it will still be treated as an unpaid or undeclared tax, or if we are talking about only the net impact of the import of goods and then the credit of the same. Now, this I can kind of quickly through. Whenever a legal representative is appointed on behalf of a taxable person, they are required to inform to FTA that they have been appointed as a legal representative, and the failure to inform itself kind of have a penalty implications right from earlier 20,000 now been rationalized to 10,000. But this is to inform that a legal representative for a taxpayer has been appointed. And then, of course, as per the VAT law, going forward, the legal representative is required to submit the VAT returns on behalf of that taxable person. And the failure to submit those tax returns, the penalties remain same as 1,000 dirham, which is the same penalty as delayed submission of tax return, 1,000 dirham for the first time. And in case of any repetition within 2 years, 2,000 dirhams. This I've just, instead of going line by line, I've just pulled out the full table. Quickly going through the fact that if the pricing which is being displayed is, and if you have a menu card or if you have a price list displayed in the shop and everything, and the prices are, if somebody used to put, especially in 2018, small asterisks in the end as a note, 5% VAT will be separately charged. Especially in the B2C supplies, the declared prices should be inclusive of VAT. Earlier, the penalty used to be 15,000, now has been rationalized to 5,000 in case of such failures. And there is a profit margin scheme which we discussed in one of our earlier webinar on the public clarifications that companies or people who are dealing in, especially in the second-hand goods, they have an option to pay VAT only on the profit margin of those second-hand goods, but FTA needs to be informed about it in advance, and the failure to do so entails a penalty of 2,500, which has not been paid. Similarly, in relation to the designated zone, the penalties have remained the same in terms of any non-compliance with the conditions and procedures. The higher of 50,000 or 50% of the tax, whichever is higher. This is essentially three penalties, but for the purpose of discussion, we have clubbed it into as one, that if there is a failure by the tax person to issue a tax invoice or an alternative document, a tax credit note, or the conditions and procedures in relation to the electronic tax invoices. Earlier, the penalties used to read like 5,000 for each document. So if a company has issued 1,000 incorrect invoices, theoretically, it could have been 5 million penalty. But now the revised penalty language, one, the amount itself has been rationalized to 2,500, and the language uses for each discovered case. So whether the discovered case means each invoice, or discovered case means every time FTA detects in terms of the visit or anything, that needs to be seen in the future. But the failure to issue a tax invoice could attract a penalty. Now, again, referring back to a point, and we have issued guidance videos in relation to the correct format of tax invoice. Even today, when we assist our clients in the tax compliance and review their purchase invoices from various suppliers, we fairly regularly come across invoice formats which are not correct, or which are still have certain errors, and may not contain the right particulars, may not display the data correctly and everything. And it's possible, or it is likely, that those instances could also be treated by the tax authorities as non-issuance or failure to issue a proper tax invoice. So please be careful about the tax invoice. In case you want to refer to the guidance video, you can click on the YouTube. We have uploaded the guidance, the generic guidance video on the YouTube. You can just simply search by the name Ask Pankaj Tax Invoice Guidance Video. We recommend and request all of you to please review the tax invoice formats and do not fall into this error. Now, in terms of the overall action points of this reduction in the tax penalties, of course, look out for the details of the tax amnesty scheme. As we said, the FTA is yet to come out, and whether it will impact the current ongoing litigations at the different forums, and what all penalties would be covered, what all penalties may not be covered under the amnesty scheme. So those details is something we'll have to look out in terms of the details. Of course, assess your past VAT excise returns to identify the errors and submit the voluntary disclosures at the earliest. As we said, uh, compared to the point of time in which voluntary disclosure is submitted after receiving the audit notice or before receiving the audit notice, there is a significant difference in the quantum. Also, from the 0 to 4 years of the due date of the tax period, the timing of the voluntary disclosure could impact the penalties on this. Of course, uh, all the errors generally happens based on the tax positions which have been taken by the company, whether tax is payable on something or not, whether the credit is eligible on something or not. In case of any doubt, you can seek official clarification from FTA. Their website gives that process. It's a fairly simple process. If you want, you can yourself write to the FTA in that particular application format and seek a clarification. If you want any assistance, feel free to reach out to your tax consultant, tax advisors, and take a clarifications. It's easier and more determinative and assuring to have a clarification and then act accordingly, rather than sitting at a risk that tomorrow a tax position could be challenged by the tax authorities. If you look at the handout, the brochure, I just thought I'll mention it. Given the paucity of time, I'll just take a minute that uh, in this new penalty regime, you can read more in the brochure in the handout. We always believe in this 4R strategy, that as a company, as a taxpayer, you need to be ready to comply. Compliance is not just a kind of a day-to-day affair. Correct compliance will make sure that your company is not falling into a penalty trap. So be ready to comply to all the tax laws, the clarifications which comes by the tax authorities. React to advice. So any new business model, new transaction, even a minute or a smallest change in your tax structure, business transaction modeling could impact your tax significantly, because end of the day, VAT is a tax on transaction. So the way you structure the transaction, the VAT implications would follow. Of course, reveal to optimize that more you reveal to your tax advisors and the tax consultants, they can advise you better. So, if as a tax advisor we do not know about your business model or a business transactions, then we would not be able to advise to optimize this. And of course, revolutionize to maximize that. More and more you go across the tax functions, there are a lot of activities which can be either automated or which could be set as a standard operating procedure, would could help you to maximize the overall what we say the benefit out of it in terms of the reduced cost and leading to an increased profit. So with this, we close and summarize our focus topics. I'll quickly go through the monthly updates and then we'll open the floor for the live Q&A with the participants. During the sessions, you can also type your questions in the control panel. There is a question panel, and we'll take up the written questions as well. In terms of the public clarification, one public clarification on the bad debt relief, VAT P024 has been issued. Most of the public clarification essentially clarifies the law which is already existing. So there are 4 conditions which are there to claim a bad debt relief. A bad debt relief basically is that as a supplier is required to charge and deposit the VAT to the FTA based on the issue of tax invoice. So it's on an accrual basis. And it can so happen that a customer to whom the tax invoice is issued, who's supposed to pay for the supplies as well as the VAT amount, do not pay to the suppliers, and then in addition to the overall business loss, the supplier is also short of that 5% VAT which has been paid to the FTA. Globally, the bad debt relief is available, and the conditions for bad debt relief is that whatever is this outstanding amount from the customer should be written off in the books of account. So this public clarification essentially clarifies those conditions, that as a condition 1, the supplier should have charged and accounted for the VAT on this. Then it should have been written off. I'm just highlighting, sorry, because my line is not straight as it. Uh, the, the 2 critical points is more than 6 months should have passed from the date of supply. And the public clarification specifically mentions that the supplier should have made efforts or should be in communication with the customer for the recovery of this debt. So it should not so happen that you have issued an invoice, paid the tax, and the payment has not been made, and then after some point of time you write off the debt. The FTA may like to see your correspondence with the customer in terms of seeking this recovery of the debt. And the last is, of course, the most important, that there should be a notification, or the supplier should notify the customer about this write-off of the bad debt. And a lot of companies hesitate, or a lot of suppliers hesitate to notify the customer, because in which case they want to pursue the debt as well, as well as claim a bad debt relief. So this clarification essentially takes care of that issue that customers should have been notified that this amount has been written off. Legally, whether you can still pursue the debt is a separate civil law matter. We are not discussing about it. But public clarification is saying that they would like to see evidence that the customer has been notified. It has also been clarified the mode of communication could be any. It could be email, it could be letter, it could be a registered post. And it is not necessary that a acknowledgement from the customer would be required. So if we have sent an email to a regular email ID of the customer on which we have been interacting earlier, such email should also satisfy as per the public clarification. Acknowledgement is technically not necessary. Now, in terms of the second public clarification, it's essentially an extension of the zero rating of certain medical supplies like face masks, sanitizers, and everything. If you recall, as it was applicable with retrospective effect from 1st of September 2020, and that zero rating was to otherwise end on 28th of February 2021, but now it has been extended to 31st of December 2021. So all the face masks, sanitizers, and everything would be zero rated up to 31st of December 2021. The other public clarification is also a kind of amendment of the earlier public clarification. If you look at the earlier public clarification, the crux was that a sole establishment will not be treated as a separate entity for separate VAT registration. So a person who's owning a number of sole establishment will have to consolidate all the sole establishment into a one. Will have to. I'll rephrase my sentence. A person having multiple number of sole establishment is eligible only for a one single VAT registration for all the sole establishment together. So each sole establishment will not be given separate VAT registration. The earlier public clarification talked about a natural person only, and the revised public clarification essentially clarifies that the term person refers to both natural as well as a legal person. So that's the clarification amendment which has happened. In addition to that, business bulletin has been issued on the automotive sectors in terms of various transactional based issues relating to the automotive sector. The VAT implication of that has been clarified. It's a very, very good read. One must always read. And as I always say, VAT at the end of the day is a tax on transaction. A transaction structure which is true for automotive could also be true for a retail sector, could also be true for a manufacturing sector. So just by looking at the title of the bulletin, please do not think, oh, our company is not in the automotive sector, so it's not applicable to us. Because this clarification or the business bulletins deals with the profit margin scheme, with the gifts and the giveaways, which could be applicable on any businesses, the repairs under warranty, the free repairs under warranty, and also a very, very common thing which in a repair has been done by a UAE company, but the repair costs have been recovered from the overseas manufacturer under the warranty or arrangement because the manufacturer was responsible eventually for the repair. The last update in terms of monthly update is a second amendment, second time the VAT executive regulation has been amended. It is essentially to increase the time period for the UAE nationals to seek a refund on the new residence. And this time period has now been increased from 6 months to 12 months from the date of completion of the residence. And accordingly, the guide on the VAT refund for the new residences has also been updated just to make this change from 6 months to 12 months. So with this, we conclude our coverage of the technical discussions on the reduction in tax penalties and the monthly updates. We'll start with the Q&A. Deepak, over to you for moderating and leading the Q&A session.
Thank you, Pankaj.
Yeah.
Before we begin the Q&A session, please note that a short feedback survey will appear after the webinar. Your feedback is important to us.
Thank you once again, and of course, Deepak will wrap up. I hand it over to Deepak.
Thank you, Pankaj, for your insights and contribution in today's session. It was very helpful and brought a lot of clarity. We once again request you to please fill the feedback form that will appear on your screen after the webinar. We thank Dubai South for their continuing support and collaboration. And thank you all for your active participation in today's webinar. We hope that the discussions and topics covered were you helpful and valuable to you. We will reach out to you for our next webinar and periodic updates. And as we always say, for any tax queries, ask Pankaj. With this,
And
we conclude our
and
today's
ask
webinar
Pankaj as a team.
as a team. With this, we conclude our today's webinar. Wishing you all good health, stay safe, stay healthy.
Thank you once again. And if while Deepak has already requested, could you please fill the feedback form? It helps us to moderate and plan the next session accordingly with your suggestions and the feedbacks. Thank you once again for your time.
Thank
Stay safe and stay healthy.
Thank you.
Thanks, Deepak. Bye bye.